Welcome to our channel, Explained, where we discuss one interesting topic a day. We all heard the news that Silicon Valley Bank is closed, and now we are thinking, what is next? Based on my analysis, I think First Republic Bank is the next one to go bankrupt, and maybe in next couple of days. According to CNBC San Francisco's First Republic Bank has already lost 75% of its stock value today after declining 33% last week. PacWest Bancorp dropped 42% and Western Alliance Bancorp lost more than 70% as regional bank stocks fell sharply. Other financial firms like Bank of America is also under pressure. Before we discuss the facts why we think First Republic Bank is the next one to go bankrupt, I'd really appreciate a like and subscribe to my channel. First Republic Bank works very differently than the other banks. It has its positive and negative points, but in given market situation, even the positives will act as negative for this bank. Here's some of the key factors. Number 1. Its limited geographic footprint. First Republic Bank's geographic footprint is limited primarily to coastal metropolitan areas in the United States. It also has a very limited international presence. This could limit the bank's growth potential in the global marketplace. Number 2. Its dependence on high net worth clients. First Republic Bank's business model is heavily reliant on high net worth individuals and businesses, which may make it vulnerable to economic downturns that disproportionately impact this segment of the population. Number 3. High fees. First Republic Bank's fees are generally higher than those of other banks, which could be a deterrent for some customers. For example, the bank's basic checking account requires a minimum balance of $3,500 and charges a monthly fee of $25 if the balance falls below that amount. This fee structure could exclude some potential customers who cannot meet the minimum balance requirement or who are looking for a more affordable banking option. Based on the top 2 points, after Silicon Valley Bank, where most of the tech investors had invested billions of dollars, there is a higher chance that the big investors are taking money out of the First Republic Bank. Number 4. The exposure to real estate market. First Republic Bank has a significant exposure to the real estate market, with a large portion of its loan portfolio tied to real estate financing. This could make the bank vulnerable to changes in the real estate market, which could impact its financial performance. For example, during the 2008 financial crisis, many banks suffered significant losses due to their exposure to the real estate market. We all are already seeing a big real estate market crash in 2023. In January 2023, 26.2% of homes in California sold below list price, down 31.1 points year. Number 5. Limited liquidity. First Republic Bank's lending activities rely heavily on deposit funding, which could make it vulnerable to liquidity risks in the event of a sudden withdrawal of deposits or a decline in deposit growth. Number 6. Reputation risk. First Republic Bank's reputation could be at risk if it fails to maintain its high level of customer service, conservative credit underwriting, and other key aspects of its business model. And last, number 7. Regulatory risks. First Republic Bank operates in a highly regulated industry and may face risks related to compliance with various laws and regulations. For example, in 2020, the bank was fined $1 million by the Consumer Financial Protection Bureau for failing to report accurate data about its mortgage lending practices. Such fines and penalties could impact the bank's financial performance and reputation. Based on these facts, I believe First Republic Bank is the first one to go bankrupt after Silicon Valley Bank. Tell me which bank you think will go bankrupt first in the comment section below. Thanks for watching. Please don't forget to like, share, and subscribe for more interesting content.